Hi, Dean Jenkins, followmetrades.com, and this is the market update for the week coming up of Monday, February 8th, 2016. Well, it just continues to be interesting, that's for sure. If you saw my video update, my market update last week, I brought up a picture of Alice's tea party. I said trying to figure out what the markets are going to do based on the news and information was kind of like going to Alice's tea party. And this week, I kind of like that Alice theme, so I'm using it again. And I'm just saying that it just gets curiouser and curiouser. And we're going to look at a couple of headlines here in a moment. I was looking for an image, for this phrase from Alice, curiouser and curiouser. And if you Google that, it's amazing how many people have that for a tattoo. I don't understand that at all. But if you Google curiouser and curiouser images, you will see lots of curious tattoos. Yeah, so why do I say it's curiouser and curiouser? Um, Here's a great headline from Reuters, and it says global stocks fall after U.S. jobs report muddles Fed outlook. So what's going on here is uh, unemployment went down, wages went up, which that sounds like a good thing, right? Unemployment down, wages up. The market is worried about is that now the Fed, a week or two ago, well, the Fed's not going to raise rates, because the market's going down and all this information. And now it's like, whoa, maybe the Fed's going to raise rates. Again, trying to make decisions and trying to trade based on these daily headlines and news events is like going to Alice's tea party, and it just gets curiouser and curiouser, and it just points me back to the reality of the charts every single time. And while we're looking at this Reuters article, I couldn't help but see the picture here of the trading pit. This is in Germany. Uh, and look at these. Every one of these traders has 6 monitors. I only have 4. I got a little bit of monitor envy. I think I need to go get a couple monitors, couple more monitors, just so I can at least look like a serious trader. All right, let's move on. Let's look at one more headline just for fun here. This is from USA Today. It cracks me up whenever I see USA Today. I remember I used to work for Intel Corporation. I traveled a lot. I was traveling with another friend of mine, and we're in the hotel lobby. Of course, we got our free copy of USA Today slid under our doors, and we're down there eating breakfast. He goes, "Does anybody actually buy this newspaper?" And I'm not sure that they do. But great headline here: NASDAQ hits 15-month low in a Friday free for all. There must be like a random verb and adjective generator that a lot of these reporters use because it's really interesting. It sure is attention grabbing. But let's go look at the NASDAQ chart and see all about Friday's free fall here, okay? So here is a chart of the NASDAQ composite, the index that they were talking about. And here's Friday's price bar, and it went down 3.25%. So that's a pretty dramatic move on any scale. I'm not sure that falls into the free fall category for me. I'll take a look at another stock here that we may agree was in free fall. And the other point that they said in that headline was that it put in a 14-month low. Well, I'm a little confused here because just a couple weeks ago it was lower than that, and back in August it was lower yet. I don't work for Snopes.com to verify urban myths, and I'm not the fact checker for presidential debates or for journalists, but I think that's wrong. I don't think that was a 14-month low, but it was a big drop. It was a big drop, and that's for sure. Here's a chart of LinkedIn. Now, if you want free fall, here's free fall. LinkedIn closed down. You can see this big gap between Thursday's close and Friday's open, and it closed down, from high like 190 or something down to 108. It was a 44.28% drop when their outlook on revenue and growth and stuff obviously displeased the market. That's free fall. Back in the 80s when we had Black Monday, or there's been a series of Black Mondays, there have been some dramatic market moves. So I'm not sure a 3%ish drop in the Nasdaq. It's dramatic. It's a lot, but free fall may not be the verb or the adjective that I would choose to describe that. But I'm not trying to sell newspapers. I'm trying to trade for profit here. So So speaking of the NASDAQ, I've switched over to a weekly chart here, so every price bar is a week on this chart. I've primarily looked at the S&P 500 and the Dow Industrials, and I haven't really given projections on the NASDAQ, but I had the chart up. I thought I'd show you. So this is on the weekly chart. Again, I'm convinced the bear market has started. That's being proven over time here. And so we closed at 4363.14 today. The range for the correction on the Nasdaq is down to 38.75 down to 30.39 if you're interested in the levels for the Nasdaq. But now let's go ahead and take a look at the S&P 500 real quick. So this is a short time frame. This is a 60-minute chart. Every price bar represents 60 minutes, 1 hour. This is the S&P 500 futures contracts called the E-mini. So earlier in the week on Monday, I was invited to be a guest on a panel of experts who were. It's a show that meets every week. It's called timingresearch.com, and the guests are asked to project what's going to happen on the S&P 500 for the week. And so my analysis was it was going to be down. And so the market opened at this dashed blue line here, 1975 on Monday, and obviously we closed down. And the analysis I showed on that show was exactly what you're looking at here. This is a classic Elliott wave setup, right? Out of this little bit of channel we had it back here, wave 1, wave 2, late December into January, there's monstrous wave 3 down, no mistaking it, a very predictable wave 4 up retracement, and now the next wave down into 5. High probabilities, and this is short term over the next week or two, going down to 1766 to 1662 on the S&P 500. So that's a quick short term. It'll certainly go up and down and up and down, but it's going to end up super high probability in the short term over the next few weeks down here, 1766 to 1662. And now we'll jump out in time. This is the S&P 500 on a weekly chart, and just to reiterate the price targets on that. Remember the one we just looked at was for 60 minutes, a little bit shorter term. Over the course of 2016, maybe even longer, I fully expect the S&P 500 to work its way down 1644 to 1343, maybe even lower. So that's a projection on the S&P 500 on a longer term time frame, and it's doing nothing but proving this as we move on in time here. This 6-year bull run up, the maturation of that trend, and then this clear sign of a new trend down of the lower lows, lower highs, lower lows. If you've been following me, that pattern, I use that all the time, along with the Elliott wave count, and it's just playing out. And I think as more time goes by, this projection gets higher and higher probability. Here's the Dow on a weekly chart, and these are levels we've talked about before, but I'm just bringing them up again. Got some new subscribers. So same thing as the S&P 500, 6-year bull run. The trend has definitely matured. We've got all the evidence of a bearish downtrend starting, and the target for the S&P 500, normal, healthy retracement, not a catastrophe, and not unexpected at all, but for the Dow to go down between 14,429 to 12,003, maybe a little bit lower. So those are the projections for the major indexes. Here is gold futures contract. If you remember 2 weeks ago, I said if we cross this line 1113, if we go above this line, we have all the evidence we need that the recovery in gold is well underway. It's come down pretty much the same way the 6-year bull market stocks went up. Gold moves roughly in inverse correlation to the equity markets, and so completely expected that as the markets are heading in, the equity markets heading into a bear market, that gold would see a recovery, consolidated into a channel down here at the bottom. Clear evidence, higher highs, higher lows higher highs and new highs, and we just see gold continuing to take off. So I said if it crosses this 1113 line, that I thought the recovery was underway, and we've got a long way to go up for gold from here. Here it is on the weekly chart. The retracement, just a recovery from the downtrend on gold, takes us up to 1347 to 1532. And I believe that this recovery is underway. Won't go straight up. It's not instantaneous. There will be higher highs, higher lows, higher highs, higher lows. maybe some consolidation along the way, but that's where the analysis and the high probability is taking us on gold. So the last couple of weeks, I said about oil. We're looking at the oil futures contract here, the daily chart, and I said, oil may not have found a bottom, and it may not have. It may not have, but it did something pretty interesting off this low right here. It went up and made this high, and it's pulled back. What it does next will tell us about, at least the near term, what's going to happen with the trend. If it goes down and puts in a new low, this pyramid will turn red. It will be confirmed, and everything else is predicting more lows to come. If it goes up above this line right here, which is 34.94, then we'll see this pattern of a high, a higher low if it doesn't go lower, and a new high, and that very well may tell us that the retracement to this incredible bear trend in oil, that the retracement may have started. That's not a new trend at this point. That's simply a retracement to that big bearish trend. But watch this closely. If over the next week or two, if we don't put in new lows and we go above 34.94, that'll be key. That could signal the retracement beginning in oil, and it's got a long way to retrace back up into the $60 to $70 range. So over double from where it's at right now. Well, that's the update for this week. We're still in a bear market. We still got some great short trades going on the stock pick service. We've also got some long trades that are really going well. In fact, based on my analysis on gold, we went long on a gold mining stock this week, and we're doing really, really well on it so far. Thanks. As always, if you have questions or feedback or comments, I'd love to hear from you. Drop me an email, dean@followmetrades.com. And that's it for this week, and we will catch you on the next week's update. Take care and enjoy the Super Bowl. I live in the Seattle area. The Panthers took out our Seahawks, so if they're going to beat the Seahawks, I hope the Panthers win. But mostly, I hope it's a good, entertaining game. It's close, it's exciting, and that no one gets hurt. We'll catch you next week. Thanks.